Hello, I'm Michelle Makori. Thank you for joining us. With the United States national debt now over $34 trillion, some of the biggest names in finance have been compelled to speak out. After JP Morgan Chase CEO Jamie Dimon warned of a market rebellion against the national debt, Fed Chair Jerome Powell has issued his own candid warning. In a CBS 60 Minutes interview, Powell, who said he normally doesn't comment on politics, criticized lawmakers for effectively borrowing from future generations with their unsustainable fiscal policies, saying that it's time for an adult conversation about the debt.
In the long run, the U.S. is on an unsustainable fiscal path. The U.S. federal government's on an unsustainable fiscal path, and that just means that the debt is growing faster than the economy.
I have the sense this worries you very much.
Over the long run, of course it does. We're borrowing from future generations. It's time for us to get back to putting a priority on fiscal sustainability, and sooner is better than later.
Now, Powell's warnings are generating controversy for several reasons, but he's not alone, with other prominent figures on Wall Street also now focusing on the consequences of skyrocketing levels of debt. Jamie Dimon recently warned about the U.S. economy heading towards a financial crisis due to escalating national debt. Dimon worries that if U.S. lawmakers don't alter the current path of spending and control the national debt, that there could be a rebellion among foreign owners of U.S. government bonds. Ray Dalio, the founder of hedge fund giant Bridgewater Associates, has also been warning that the U.S. government is reaching an inflection point with its debt problem. Well, here to give us his read on the U.S. economy in the long term and the short term, as well as his take on the Fed, the biggest risks facing us in 2024, and of course, share his insights about market opportunities and how to make money, is Charles Payne, host of Making Money with Charles Payne on the Fox Business Network. Charles is also the Chief Executive Officer and Principal Analyst of Wall Street Strategies. He's also the author of several books, including Be Smart, Act Fast, Get Rich, Unstoppable Prosperity, and his latest book, Unbreakable Investor. Charles, welcome to Kitco. Very good to have you on the show.
It's great to be here. Thank you very much.
It's fantastic to have you join us. It's such a treat to have you answering the questions instead of asking them for a change. Well, I really did enjoy reading your book. It's entertaining, it's insightful, it has a lot of nice personal anecdotes, historical references, but it's also very pragmatic. It's a very practical how-to book with insights on how to navigate the economy and the markets to become an unbreakable investor, as you say. And what I really liked were those quizzes at the end of the chapters, just to make sure that I am paying attention over there. But before we get into that, Charles, I do want to get your thoughts on what we heard from Powell. And it is pretty rare to see a Fed official discuss politics. The Fed is supposed to be a nonpartisan, independent institution. Powell did acknowledge as much in that 60 Minutes interview, but then he went on to criticize lawmakers anyway for effectively borrowing from future generations with what he called their unsustainable policies, saying that it's time for us to get back to putting a priority on fiscal sustainability. So what do you make of that? What do you make of what we heard from Powell?
It sounds good. It's a nice soundbite. Powell is an old school Republican, but just the function of the Federal Reserve itself, it sort of belies what he was saying. They've always been the biggest buyers of U.S. Treasuries, which facilitate this sort of crazy nonstop spending, by the way, on both sides of the political aisle. So I think that's why he had free reign to speak about it. It wasn't like he was pointing fingers at anyone in particular. He was just saying pox on both houses. But how about pox on all three houses? Republican, Democrat, and Federal Reserve. The monetization of the debt. It's it's an amazing relationship when you think about it. The Fed sort of created out of thin air, like all these central banks, with the promise of no more boom and bust cycles. Of course, that was in 1913. We immediately had a harsh panic in the 1920s. And then, of course, there came the Great Depression after that, and a series of booms and busts in this country. And every time to soothe it, they essentially print more money.
Yeah.
And so now we're here at the precipice of this, situation where, he rightfully acknowledges that there's a problem. But And to be quite frank with you, Michelle, I don't see the Federal Reserve doing anything about it. I mean, the general role is they play a role in all of this, and they're not backing away from this role. In fact, the irony is almost every single year there's more jobs given to them, more responsibility is given to them. I think the Federal Reserve is already far too powerful an entity, not truly responsible to anyone, not truly answering to anyone. And it's part of the problem. He's pointed out a major problem. Unfortunately, he didn't underscore his part of the problem.
Right. The Fed is effectively the enabler here. The Fed is part of the problem. And you do focus a lot on the Fed in your book, Charles, why the unbreakable investor needs to pay attention to what the Fed is saying and doing. And you discuss the history of the Fed, and you mention how in 1913, the U.S. Senate passed the Federal Reserve Act, and I'm quoting you here, set into motion the creation of an entity that has become the most powerful in the world. The Fed can't wage physical war, but its ability to move the U.S. economy and even indirectly the global economy is without equal. So have we let the Fed get too powerful here?
Absolutely. And that's where Congress really blows it. Congress actually had the role for a long time of making sure that we have full employment in this country. They gave that away, I think, in 1977, that sort of job, they gave it to the Federal Reserve. And there's just too much. The Federal Reserve is responsible for far too much. And again, who do they answer to realistically? Who gets to fire Jerome Powell tomorrow? No one. But periodically they come up for these new jobs or to be reassigned, to reappointed. But other than that, you can't fire Jerome Powell tomorrow. And what I'm really concerned about now is that we've created this all-powerful entity, almost like Dr. Frankenstein's monster. And within that entity, it's really shifting. I mean, people would be shocked to learn how left-leaning it is right now. I mentioned Powell as a Republican, but for the most part, overwhelmingly, they're very liberal, left-leaning Democrats in there. In fact, progressives. Janet Yellen, I don't know if anyone's ever looked at her writings from 20, 30 years ago, her and her husband 40 years ago. These aren't typical economic summaries. These are really the kind of things that you would see in a pamphlet on socialism. And so these are the folks, Lael Brainerd, who will probably be the next Fed chair. Now she's working within the Biden administration. These are the folks that are going to take control of the most powerful entity out there. And I do believe at some point it will be more politicized. I think to a degree it is now. And you hear it when they do the pre-ramble. In other words, when it's at the FOMC and Jay Powell steps up to the microphone rather, and he starts to, before he takes questions and answers, he reads that script. And then within the script, it acknowledges, hey, our what we do affects everyone. And we try to be fair. And of course they're not fair. Think about what they just did. Hiking interest rates so much so that their goal was to break the economy. Their goal was to increase unemployment. What it did was it made life more expensive. And the only people who really did well were wealthy folks with treasury bonds. And they saw their treasury bonds go through the roof and their yields go through the roof. So as one large chunk of the economy, 70% was suffering mightily, another 30%, who, by the way, you're not going to break them. They're not living paycheck to paycheck. So just even how they go about their job is so mysterious to me. Like, again, it really is a rigged system for people who feel that way. I always acknowledge it is a rigged system, but it's a system that we have. And so we have to learn how to work within it. But I do hope that one day Main Street America somehow forces Washington, D.C., the president, Congress, to take back some of this power from the Federal Reserve. It's got far too much.
I mean, we're starting to see that in terms of a little bit of a trend from the likes of Javier Milei in Argentina. He's saying he wants to abolish Argentina's central bank. I mean, we assume that the Fed has always been around because we talk about it. But as you know, we just touched on, it's only in like the last 100 years or so that we've had a central bank artificially guiding the economy. Do you foresee a situation where there is no U.S. central bank, or at least one, as you say, with diminished powers?
I can see one with diminished powers. I'm not sure that anyone would want to go as far that we can get enough lawmakers, enough senators, enough congressmen, enough folks in Washington, D.C. to go along with it because we can't get them to push back on TikTok. There's certainly no way in the world they're going to totally abolish the Federal Reserve because ultimately, their donors benefit from it.
Right.
That's what we always have to remember. Who benefits most from it? It's their donors, and their donors will not allow them to get rid of the central bank, our central bank.
And as you explain in the book, it's a trickle up economy with how the Fed has artificially managed the situation. I want to focus, though, on the long-term concern that Powell did highlight, and that is, of course, this unsustainable level
Right.
of debt. And the U.S. government debt to GDP, a measure of total public debt to economic growth, has surged from just over 100% in 2019 to over 120% now. And as Powell put it, the government's debt is still growing faster than the economy. As we mentioned recently, Jamie Dimon warned of a looming hockey stick surge in debt. He worries that if U.S. lawmakers don't alter the current path of spending and control the national debt, that there could in fact be a rebellion among foreign owners of U.S. government bonds. Dimon said, and I'm quoting him here, "It's a cliff. We see the cliff. It's about 10 years out, but we're going at it 60 miles an hour." What do you think are the consequences of this? I mean, do you see a rebellion of foreign owners of U.S. government bonds? Do you see this de-dollarization trend really picking up?
There's no doubt the de-dollarization trend is picking up. The big question, honestly, is that we have fumbled this gift, this responsibility of being the world's reserve currency. We've actually fumbled it. The only problem is there's no one else out there to take advantage of it right now. But that's not always going to be the case, right? I mean, you think about the transition from Great Britain and the pound being the world's reserve currency. The first time that started to change was in the 1920s. And then, of course, there have been other things, Bretton Woods and some other things that happened. Saudi Arabia pricing oil and the petrodollars. So there were key events along the way that solidified us as the world's reserve currency. But to say that we still sort of should have that is arguable. But who replaces it? Now, of course, there's big talk of Saudi Arabia, other nations joining the BRICS nation. They've been accumulating a lot of gold over the last several years to maybe have a sort of resource-backed currency. If they can get India to really go along, you'd have nations that are very young. Their populations generally would be very young versus very old nations, particularly Europe and Japan. Highly educated, again, especially with India in the mix, highly motivated. They would be really supremely positioned. They would control over half the world's resources to really make a big push to either be equal to the U.S. dollar or at some point surpass the U.S. dollar.
Right. And, this de-dollarization trend, we discuss it at length here on Kitco. Mainstream media doesn't really focus on it, with the exception of your show. I do know that you talk about it, but it's quite surprising how it's not really something that makes its way into other more mainstream media outlets. And it is an accelerating trend. I mean, to your point, we have the BRICS that are saying that they want to de-dollarize and trade in their own currencies. We look at this trend of countries moving away from the US dollar. According to the latest IMF data, the US dollar accounted for around 59% of global allocated foreign exchange reserves. We're seeing the bifurcation of the global monetary system, like you said, with the BRICS encouraging trade in their own currencies away from the dollar, conducting trade deals in yuan, rubles, rupees, dirham, an active push to ditch the dollar. And as you mentioned, the BRICS expansion will only potentially accelerate this, especially if they launch their own global reserve currency backed by some kind of commodities. But do you really think that the end of the US dollar as a global reserve currency is anywhere near the horizon? I mean, granted that every global reserve currency has lost its status, but what kind of timeline do you think we could look at here if this does in fact happen?
Well, I think it happens in my lifetime. And I'm assuming I'm going to live a lot longer.
In your lifetime.
Yeah, my lifetime. Definitely think it's a process. It's a process. Like I said, it's that you think about, the steps that the transition between the pound and the dollar. It wasn't an event. It was a process. So it was a series of events that began in the 1900s, late, like 1913 in that time frame. And after World War I picked up speed. After World War II picked up speed. After Bretton Woods picked up speed. After the petrodollar picked up speed. So it was a process. So the process, I think you can almost argue maybe has begun, because you already pointed to how large nations with large economies are already transacting business in their own currencies, bypassing the dollar. So when the story is written, whether it's 20, 30, 40, 50 years from now, that will be in the chapter 1 that you just described. So that's where we are. The book is being written. I think it could happen in the next 20 years or earlier, to be honest with you. But again, that means other nations are going to have to show a sort of form of fiscal responsibility as well, and to really make the transition. And listen, Great Britain was overextended. They were really proud of that slogan, "The sun never sets on England," but that was part of the problem, right? They stretched themselves far too thin.
Right.
And of course, I think we've done that internally. We don't need to we don't need to colonize the world, but we've already spent so much money. And, listen, there's still this element in America that we should be the policeman of the world. We should also be, we should be the mortgage agent of the world and all these sort of things. And there's obviously a breaking point that Jamie Dimon referred to, that Jay Powell referred to. The problem is we don't know where it is. I remember going back to when Obama was in office, President Obama, and, Republicans made this point, and it became a big issue, became a big national issue across political lines and even in mainstream media. For a long time, everyone wondered when Granny was going to fall off that cliff. But Granny didn't go off the cliff, and now people don't pay attention to it. You say the mainstream media doesn't mention it because it's a little bit too wonky for them. It's a little bit too much of a downer. Maybe they mention it more. A lot of times what they mention and the ramifications, a lot of times, unfortunately, depends on who's in the White House and how much they like him or her. So it's happening.
Well, let's talk about who's in the White House, because Charles, many would argue that the Biden administration policies have accelerated this trend, that we had excessive weaponization of the dollar with the sanctions against Russia for its invasion of Ukraine. Yeah. Some would say that the Biden administration may have, in a way, not stopped that there could have been a diplomatic solution to stop that. That may, in fact, be the diplomatic solution that we land up with several years later after this winds up, and then that they excessively weaponize the dollar by kicking Russia off the SWIFT system. Some analysts on this show say that the Biden administration is perceived as weak on the global stage, and that if what's backing the U.S. dollar is full faith in the U.S. government, it doesn't look very good when the administration doesn't seem to exude strength globally. And then, of course, we have all of this excessive fiscal stimulus that we touched on. Now, granted, as you mentioned, it was starting to happen well before Biden. And as I said, every reserve currency does lose its status. But do you agree that this trend that is jeopardizing the dollar status as the global reserve currency has accelerated under Biden?
Absolutely, 100%. The other thing you didn't add was rule of law.
Right.
We're in the middle of a presidential election where one of the candidates has got 92 counts against him, efforts to make sure he can't be on ballots that are being determined by bureaucrats. We have 3 branches of government. And by the way, the American public should always be entitled to vote for who they want to vote for. So we are seeing this notion of rule of law where the Supreme Court says, hey, you know what, this the student loan thing that you tried to pull off, not only did you know it's illegal, but we're going to let you know it's unconstitutional. You come out the next day and say, we're going to do something like that anyway. When you have one branch of government that keeps ignoring the other 2 branches of government and has declared war on their political opponents. So, that's the intangible thing that's so tangible when you start talking about full faith and credit. You have faith in a nation that has a set of laws. Our laws are based on our Constitution. It's one of the reasons America was able to propel itself from this upstart nation to the number 1 nation in the world in the blink of an eye. Other nations brag about they're 2,000 years old, they're 3,000 years old. Well, we're a brand new country, and we were able to do it because we believed in the people. There was never a chance to have this sort of society where just a handful of folks always made the decisions, always garnered all the gold, and never allowed for upward mobility. We just happen to have a system that ignored that, and this is where we landed. So rule of law, the SWIFT system thing was a huge mistake. Was an absolute huge mistake. Another thing, Michelle, when you see talk of this kind of stuff, I know in the beginning, for instance, you see it all the time, whenever the left says, hey, we want to institute some sort of a policy, and then they say, because look at the world, they'll say everyone else in the world agrees with us. They show you a map of Europe and Japan. That's all they ever do. That's the world. That's the world in their mind. They never show you what African nations are thinking. They never show you what South American nations are thinking. They never show you what China is thinking. They don't even show you what much of Asia is thinking. In their mind, the world is Europe, Australia, and Japan. And so our allies are with us, and this is world opinion. It's not world opinion. A lot of folks are watching this whole thing play out because the Russia-Ukraine history is a lot more complicated than any American knows. And a lot of nations themselves were sitting back. They didn't take sides. But when they saw them pulled off the SWIFT system, they said, well, what if we ever run afoul of the United States? What I mean, just like that, they can flip the switch. And it's backfired in many ways. You know, Russia's selling more oil than they've ever sold before. They just had a banner year last year. They set a record $36 billion profits, I think, in their banking industry. And it just wasn't well thought out. It wasn't well thought out. And again, it's this eagerness in this administration to do knee-jerk things that really go against who we are as a nation. They really do. And whether it's keeping someone off a ballot to be president of the United States or kicking Russia off the SWIFT system, even though they became villain number one, we still have rules, or we used to have rules. And it's backfired miserably. And the rest of the world is seeing this, and they're really anxious to have options.
Yeah. And as you said, hence we're seeing this bifurcation of the global monetary system, with other countries saying we don't want to use the dollar because, hey, it can happen to us, just what happened to Russia, and we've abused that privilege. But Charles, in terms of the ability to turn this around, is it too far gone? Can a change happen that at the very least extends the dollar's longevity?
Well, I think you can always kind of right the ship. Maybe the inevitable is the inevitable, but you can certainly put it off, I think, a little bit. But again, you know, if we begin this conversation with fiscal responsibility, that gets us back to to both political parties. And there's always only been a handful of folks who have talked the talk. Very few have actually walked the walk. And really, and if we're going to be honest about it, if it takes us back to political parties, it takes us back to the American voter. And ultimately, we have to see, here's our problem in America. We always say overwhelmingly, throw the bums out. Get rid of those bums down in D.C. with an asterisk, except my bum. My bum brought us a birds of nowhere, so keep my bum, but get rid of the rest, right? When we start saying get rid of my bum too, put in term limits, let's be serious about this, then I think we got a better shot.
Term limits are certainly one way to make sure that people are doing what they're supposed to be doing in the best interests of the American people at large up there on Capitol Hill. I want to circle back, though, to this comment that you said in your lifetime. I'm wishing you a very long life, Charles. I know in your book you talk about ways in terms of technology for extending longevity. Assuming, that doesn't really kick in yet, are you thinking in 30 years or so? And then again, when you say the end of the dollar, do you see that as still being in the system? I mean, the pound is still around, right?
Yeah.
Well, how do you envision it? And of course, the big question is always, and so what takes its position? So I'll put that to you.
I think it would have to be a basket of currencies that would include, China, obviously China, India, the BRICS nation, more or less. It would be, I think, initially a basket that trades on par with the U.S. That when you start to see global settlements, I think there could be a time within the next 20 years where those settlements are even, or where the dollar no longer dominates. Now it could be 30%, and then the rest a smattering of other currencies out there, like Japan's and others. So I think it could happen within a 20-year time frame.
And are you buying the feasibility of this commodity-backed block currency coming from the BRICS Plus?
I am buying it. In fact, I think one of our blind spots in this country is the notion that we're going to build a bunch of windmills and never use never use fossil fuels again. Of course, the other side of that, to keep that climate utopia source of energy going, we're going to have to strip mine all the other minerals that are in this planet and find a few on asteroids that are passing too. Yeah,
well, that's a whole other conversation that we have here on Kitco News quite often. what this green energy actually does entail and mean. But as you said, inevitable is not imminent, even in your lifetime. So I want to get your thoughts on the near term, right? We're focusing very much on the big picture out there, what can happen. But I want to get your thoughts on a little bit more of a shorter term focus. And as you say in your book, we've really got to pay attention to what the Fed is saying. And we did hear a lot from Powell recently, talking about those much anticipated cuts. A March cut is off the table. What are your expectations there?
Man, it's so crazy that this is the polar game. I think Wall Street has certainly got over its skis. So we had a 1-2 punch. Late October, Jay Powell gives a speech. Then the Fed, of course, meets sort of a victory lap, semi-victory lap. They're going to have 3 rate cuts. It's on the books. And then November 1st, the Treasury Department announces their quarterly refunding. And 3 months earlier, when Janet Yellen did that and acknowledged that we were going from $700 billion to $1 trillion and using a lot of bonds to do that, Treasury yields went from under 4% to the 10-year to over 5%. And that's when the stock market completely collapsed. And so she wisened up on November 1st, and she's playing a really intriguing game of cat and mouse. So they announced they raised a lot less money, but they end up raising more, and that they'll use a lot more Treasury bills, therefore alleviating some of the pressure on yields. So we had this euphoric move, just absolutely euphoric move, almost straight up for the stock market. I think we're a little bit over our skis here. Obviously, to your point, March is off the table. I wouldn't be surprised to see it May off the table. We can't have it both ways. We can't argue on Wall Street that it's a strong economy and that the Fed should be cutting rates. So it's one of those things has to give. I am still leery of the so-called lag effect, that a lot of things that the Fed put into place are going to come to fruition. The big thing is none of these economists, no one in the history of our planet has ever seen what we just gone through in terms of just phantom money. It wasn't just $2 trillion in the COVID aid bill. It was $1.3 trillion and stuff given to businesses, like the PPP program that you didn't have to pay back. Then there was other things, you didn't have to pay rent for a long time. You still have a large chunk of kids, not kids, because a lot of them are older folks, not paying student loans. A lot of excess money circulating in this economy. It's taking a lot longer to drain it out of the system. But once it's gone, think about this. When we get used to spending a certain amount of money as a nation, we go berserk. We never go back unless we're forced to go back. So I can't see us hitting a brick wall at some point this year. The irony would be if the Fed has to cut rates because some of this data starts coming in a little bit more realistic.
Right.
It's a game. I don't get too crazy with it because, first of all, it's so hard. I don't trust the data, to be quite frank with you. So it's tough. And I think something's happening, but I don't know when. So I just for me as an investor, I just try to find the right companies to be in, either from a fundamental point of view or for other reasons that I think make me feel comfortable owning them. But as far as the economy is concerned, I think we're going to end this year really looking pretty ugly with our economy.
So you're not buying this soft landing narrative,
No.
because that's gaining traction out there from the biggest banks on Wall Street, from the Goldman Sachs to, Bank of America, all saying that we should expect a strong year, to the IMF, to Janet Yellen. Everybody's saying it's going to be great. We're going to have a soft landing. Charles Payne is not buying that.
No, I think we have a soft landing for a split second. Then we're going to look around and we're going to be, hey, wait a minute, we're still landing, right? So for a moment in time, it's going to feel like we've had that soft landing, but all of a sudden you're going to look out the window and we're still going down, and we're still going down. Like what? Whoa, wait a minute! I thought we landed. No, it's still happening. So we've got a lot of things. We have put ourselves. Listen, we had a hell of a party. All of that cash I just talked about, those trillions of dollars, everyone had a hell of a party. The CEO of Louis Vuitton became the richest person in the world because everybody was buying Louis Vuitton bags and shoes. And it was a hell of a time. It was fantastic. But now we have to pay the price for it. And I tell you, we always pay that price the hard way.
But before we get into the market specifically, I do want to focus more on this economy. And you saying you're not trusting the data. Everybody wants us to believe that everything is hunky-dory, peachy keen, coming up roses in the Biden economy, in Bidenomics. I mean, we just heard from Treasury Secretary Janet Yellen praising the significant economic recovery under Biden, pointing to that robust GDP growth, a decrease in inflation, a strong labor market. That's what the numbers are telling us. That's what the data on paper indicates.
Right.
We've also got equity markets looking strong. But it feels, Charles, as though there's this disconnect between the data, the equity markets, and what real people are feeling in terms
Right.
of confidence in their own finances. I mean, how do you explain that?
Because real people are dealing with real life. They're not dealing with massaged numbers or semantics. For instance,
So massage numbers, Charles, sorry, do you think they're giving us fake numbers? Or, I mean, we know they revise the data differently. We know they're throwing in government jobs and making it out like it's a robust jobs picture. What do you mean by massage numbers?
they're just badly accumulated. They're badly. For instance, the January jobs report, I think only 55% of the respondents even bothered to fill out the form. Now, historically, that number is 75%. Now, remember, we're dealing with surveys. So you want a certain solid pool of people answering those surveys. So all of a sudden, these companies aren't answering the surveys. Why not? That is a red flag in of itself. 30% of the respondents to the JOLTS report answered a survey anymore. Imagine that. You're really taking a real honest to goodness sampling of what's happening in the entire country off of a survey that even if 100% took would be questionable, but only 30% bother to fill it out. And then there's the numbers within the data. There are 6 forms of unemployment, U1 through U6. The U3 is what's used. I'm not sure how this happened. U3 is the one that's used to move markets. It's the one that's used in the media. But it's so crazy the way it works, because if people drop out of the labor force, then more often than not, the unemployment rate goes down because they're not counted. So let's say you had 6 going into 10, that would be 60%, and 2 quit. So now you have 6 going into 8. Well, that's a larger percentage. That's the way they calculate it. But those other 2% who aren't counted, they still are out there. They have to eat. They have to be fed. They have to, So just take in November, we're down over 700,000 people in the labor force from November to January. We lost about 700,000 jobs. 700,000 fewer Americans are working from November to January. Think about that for a moment.
Right. And
Are you kidding? Are you kidding? And you call that strong? Oh, and then there's this other thing. So, well, the wages are soaring. The wages are up, but they don't talk about the work week. In January, the average American, according to their own work, the BLS report, the average weekly take-home pay was less than December. How could that be? Wages soared. They were up 0.6%, double what Wall Street was looking, and people took home less money. You say there's a disconnect? People know they're taking home less money. Mm-hmm. They're not confused. There's no disconnection there. There's no disconnect with the person who's getting that paycheck, because those prices at the supermarket won't stop going up.
Exactly.
So there's no disconnect.
Right.
And the media has spent the last 6 months working overtime for Biden. Please, you're dumb, you're stupid. Don't you see how great you have in America? And it's insulting. It is insulting.
Yeah. And as you say, we are feeling it when we go to the supermarket, because we say, oh, inflation's come down, but people forget that is the rate of increase in inflation has come down. Prices are still up about 20% from, when we started the whole excessive, unrealistic, artificial stimulus that we talked about. Now, you mentioned looking at those employment statistics with a more discerning eye. I do want to point out that in your book, you do have a very detailed section on how people should be reading macroeconomic data and microeconomic data. And you do teach them to look past what the headlines are in terms of what they're fed from most of the mainstream media. In your book, you say, no, this is exactly where you should be looking. So super helpful in that regard. In your book, you also say that the best way to make yourself fiscally independent, to make yourself financially independent, is to invest in the stock market, that it's the greatest money-making machine ever invented. Now, you just said to me that you do think that the soft landing narrative is, well, a farce, that it's going to be a soft landing and then a very hard landing. So what does that mean in terms of the stock market? When do you see that starting to change course?
Well, let's begin with the first and foremost that the stock market is not the economy.
Fair enough. Agreed.
There might have been a time a long time ago when it was a pretty good proxy, but not anymore. We didn't have zero date options that expired in 24 hours. Or here's the real deal. I just had a special, and I used this chart that showed the money supply, the money supply that comes from the Federal Reserve and the federal government. And it goes into, it's reflected in checking accounts, M2, they call it M2. And if you look at the money supply from 1929, when we crashed to where the stock market is now, if you took out the money supply, our stock market would be lower than it was in 1929. Essentially, we have a scheme that takes printed money and transfers it ultimately to the wealthiest people in America. In fact, there's a great study out from Stanford last February or March, on that $2 trillion COVID package. COVID, I say in air quotes because it had nothing to do with COVID. And this is a liberal university. This is an amazing, everyone should read this. And it shows you over the next 5 years how all of that money will end up in the top 1%. And remember, you referenced it earlier. I said we live in a trickle-up economy. We do. We used to see that all the time in Black Friday before the internet, when people will go after, eating stomachs bursting at the seams, and they would go down to the local mall and run over cops, like the mall cops, just to because they were so eager to give somebody who was a billionaire more money. We live in a trickle-up economy. And so because we live in a trickle-up economy, because we have what they call a propensity to consume, and every time money is printed and put in our pockets, we immediately go out and spend it. Well, the only way to really keep up with that and to beat inflation is to get in line. So, I don't own Tesla. I'm not Elon Musk, but I can become part owner of Tesla. I don't own NVIDIA, but I can become part owner of NVIDIA. And it doesn't even have to be these high-flying stocks either. The bottom line, though, is that the stock market, for the most part, marches higher. Other schemes that have happened, how about we only have about we've got very few, 4,000 maybe publicly traded companies. We used to have 8,000. And within those publicly traded companies, we have about almost 500 million fewer shares because of buybacks. Apple has bought back more of its stock than, I would say, 20% of the nations in the world, their GDPs, like $1 billion a day of their own stock. So there's so many shenanigans that are going on that almost guarantee that the market goes up over time. It is indeed the greatest money-making machine in history. And as long as we have federal governments that's going to keep printing money and doing trillion-dollar deficits, as long as we have a Federal Reserve that will come to the rescue, that will always come to the rescue, then the stock market will eventually always go up. It's a bunch of money that's funneled. It's a bunch of money that's funneled. Although I should do the funnel up that way, like maybe a TP or a tent. But the bottom line, though, Michelle, is so if you're in that system, if you live in that system, we can debate the fairness of it. But by the same token, I'm saying while we do that, how about we take advantage of it too?
Right. So play within the game, play within the rules of the game, because until you can change the rules of the game. And I hear your point that the stock market is disconnected from the economy, but still, having said that, what kind of reaction do you expect in the equity markets if the soft landing narrative starts to fade? Does it?
It's going to be absolutely wonderful. First, the market will go down because you have big misses that'll be too hard to ignore. Earnings season will come around. The market's down. GDP is lower than we thought. And initially, the first 6 months are going to be a little rugged, a little rough. But guess who's coming to the rescue? that man who was just on 60 Minutes. He's going to have a flag in one hand. He's going to be riding on his horse. And then he's going to be like, oh, I'm here. I'm here to do it. I'm following in the path of Greenspan, the maestro, and helicopter Ben Bernanke. And I'm going to make sure I save the day. And they're going to pour so much money into the economy. You almost want the economy to go bad. If you're in the market, you want a hiccup. You want the market, the economy to have a couple of negative GDP quarters. You don't care. Take a little hit. All right, so what? The S&P is down 15%. Load up, because they're going to load it up. So again, it's a farce. Now, listen, that's not to say that you just set in and forget it, right? There's a lot of companies come and go. It's not always the same companies that do extraordinarily well. We all kind of know that too. There's a thing like this old saying that trees don't go to the sky. I used to think it was corny, but it's kind of true. Almost every major company at some point does hit a peak. It pulls back, but there are other companies that take, golly, I wish I had this stat right now, because it's something crazy, unbelievable. Going back to like 1926, I think it's like 36,000 publicly traded companies. Out of that, Michelle, 900 are responsible for the total gain. So it's like, great companies come, great companies go. Be aware of that, but also know that the fix is in.
Right. And that stat is in your book, Charles. It is in your book. You discuss exactly how there's a concentration of stocks that are responsible for 10% of the wealth. But just to recap here, so you're seeing all of this economic sort of excessive artificial stimulus effectively catch up. We will get the soft landing. It'll be a bit of a rough period for the economy, but that's what's going to force the Fed to pivot, cut rates, and there goes the equity markets again.
Absolutely. I think that's how the next 12 months play out.
And so given that, you mentioned that, you can't just sit in there idly. What are some of your picks? What are some of the safest plays, or some of the plays that you're hearing from your guests and from your own analysis that are likely to do well in that situation?
Listen, on the conservative side, names like Hershey, for instance, that's a name that I'm kind of pounding the table on this year.
You're liking the chocolate. Okay.
I am. I think they've got pricing power. I think they're going to hike their dividend a little bit. So I think you'll be okay. Companies like Estee Lauder just had a great earnings report. I think you'll be okay there. I like Caterpillar, particularly when the dollar gets weaker. It's going to be a heck of a play. So I think there's some mainstays. Obviously, I love a lot of these technology names. I just think the AI stuff is a little bit too expensive right now. But our world is changing. We have begun the fourth industrial revolution. And so you do have to have exposure to these names. And so you have some in AI, some in software, like software as a service. That's a niche in software, SaaS. And the only problem with those names, obviously, they can be extraordinarily volatile. But that's the way we are. That's where we're going. You have to have cyber. You have to have cybersecurity. CrowdStrike is a favorite. Fortinet is another one I like, and I'm looking for cheaper ones also as we speak. So those are the areas right now. I just think you have to be in those. And believe it or not, you always have to have some, in my mind, consumer discretionary. And it sounds counterintuitive if we think the economy is going to hit a rough patch. We are still going to be a $26 trillion economy. There will still be winners out there, so whether it's Ross stores, whether it's Walmart, listen, do you really, outside of the controversy in Target, do you really not want to own Target? Do you really not want to own Costco for the next 10, 20, 30 years?
Right. So still believing in those consumer stocks. You did talk a lot about the correct way to balance your portfolio in your book. You talk about portfolio diversification, and you say you can't diversify for the sake of diversification, for the sake of balance and safety, as it just means owning stocks that are not working while eschewing those that are or will be soon. And that defeats the purpose of this whole endeavor, and that the Wall Street has sold the public on the barbell approach, which means more assets under management for them and fewer gains for the investor. So what is the way that you think people should diversify a portfolio of, say, $500,000? I give that number because that's the number you give in your book.
I think one of the things you kind of hit on right there is, like, give me an example. So the average 401k in the third quarter of last year had 105,000 let's say $600. 5 years earlier, that same third quarter, 5 years earlier, it had 105,000 and just some odd $100. You say, well, how the hell could that happen? Well, for instance, if let's say the S&P was down in 2022, 25%. If it's down 25%, it means the next year's got to go up 36% just to break even. So you're kind of spinning your wheels, with that kind of stuff. If someone doesn't want to do any work, Michelle, they don't want to do any of this. They say it's too intimidating, it's too onerous, and they'd rather stick to their fantasy football league. Okay, go ahead, give somebody your money. I want you in and not out of it no matter what. But if you are doing this yourself and you want to be a self-directed investor and kind of control your own destiny, then you're going to have your own portfolio where you are picking names and you're picking them based on, I have 3 criteria, fundamentals, technical, and behavioral analysis. I'll tell you right now, the NVIDIA story, fundamentals were there. All of a sudden, it made a major breakout about 3 weeks ago. And now it's all behavioral. Behavioral meaning like the herd mentality. And those 3 things have worked out perfectly for that stock. I admit I got my subscribers out 2 weeks ago too early. So I wouldn't say too early. We made a lot of money in a short period of time, but we also missed out on big money, which is a mistake to dwell on those things, because there are going to be times you get out of something and for the right reasons, because it's a rules-based approach and that you're going to be really grateful a week or 2 later that you did. But that's what I look at. I like companies. I like the fundamentals, companies that are getting organic demand for their product. So they have pricing power, right? We get back to Hershey's. Everyone likes Hershey's. If they raise the price a nickel or a dime, nickel, we don't really notice it too much. They're expanding their margins. They have strong cash flow. They have a strong balance sheet. They don't have to borrow a lot of money. And they're taking market share. That's a dream company. I want to be part owner of that company. And then you kind of make a list of those names, and then you look at technicals, because technicals matter. They just kind of tell you where there'll be support or resistance for a company and where there could be new support and resistance. And after that, when it gets sizzling hot, that's when everyone jumps on the bandwagon. Usually I like to sell into that kind of behavior. And just like when it gets sizzling cold on the downside, when they have a great stock. Now, I didn't buy on weakness, but Meta would be a prime example of that. Meta is up 400% from the low, where everyone threw in the towel on Mark Zuckerberg, and everyone said he was done. And they said he was crazy, that he didn't know what he was doing. That was all emotions. That last bit of it was all negative emotions. And if you can learn how to use that, then you're really killing it. But if you just only learn about fundamentals alone, you could do well in the stock market.
Right. And again, you break down all of these practical approaches in your book. You mentioned Meta, you mentioned NVIDIA, the Magnificent Seven. You're still thinking that there's lots of room to run with them?
Not immediately.
No?
Not immediately. No, this is what happens. You always get the hype phase on these things, and the stocks take off like crazy, and then all of a sudden you get the reality phase. And because things don't happen as fast as we think they will, they never have. And then you'll get the reality phase, the real phase, that when they start to live up to the hype. And sometimes that could be a 5-year period. Sometimes it could be a 10-year period. In my prior book, I did an entire chapter on NVIDIA. This is before almost anybody watching right now ever heard of it. But in 2008, it was on a cover of Forbes magazine, January issue, Company of the Year. No one ever heard of it. The stock was pre-split, whatever, let's say it was around $12. It promptly went to $2. Okay. And it stayed there for years. And now it's living up to the hype. And by the way, there's so many kids with this stock who own this way at a much cheaper price than Wall Street, because it got hot with the Bitcoin folks, because they make the chips from the mining. It got hot with the gamers. And so this is actually a stock that has massive representation for younger, like Gen Zers and young millennials. And so I'm really happy about that.
Charles, what about diversifying with gold? What room does that have in your portfolio?
I used to be at 5%. And I've always liked the bars, right? But I'm probably lower now. I hadn't bought any gold in a long time. I had some gold miner stocks that are a disappointment.
Yeah.
So I did open a Coinbase account a few years ago.
I was going to go into Bitcoin. Yes.
I had a gut feeling you would. So So maybe some of the money I would have put into gold 5 years ago has found its way into Bitcoin. But I also have other things. I'm pretty eclectic. I think over one of my shoulders you can see that little. That's the. Let me see. That's one of my art pieces. That's
I'm
the
seeing the
Monopoly.
fridge, Charles.
I'm sorry. Golly, on that side, you don't see the Monopoly man?
Maybe
Yeah,
I can see something in the back. I was going to say if
I'm
the
gonna
fridge,
see the picture. Maybe we can edit this thing. So anyway,
the
it's
fridge is a masterpiece in my world as well. So I get
yes,
that.
yes. No, I collect art, so I really have been buying a lot more art the last few years as well. So I'm pretty diversified.
And look, you're overall very, very positive. As I mentioned in the book, you touch on this idea of the roaring 20s. You're still somewhat optimistic on this fourth industrial revolution. How optimistic are you?
I'm extremely optimistic. The parallels are amazing, absolutely amazing, right? We came out of the World War I. We just came out of sort of the war on terror. They had the Spanish flu. We had the COVID. It's ironic because some people say, well, Spanish flu, 50 million people died. Yeah, but a lot more Americans died from COVID than Spanish flu. There was a recession right at the beginning of that economic period, a serious, massive recession. They just introduced taxes and immediately it was abused. So I think we went from 5% to 50% right away. And so we were in economic turmoil. We were serious economic turmoil. We were in trouble. The Federal Reserve made some big mistakes. At the early Fed had already made some big mistakes also. And then came this president, Warren Harding, who was a pro-business president. He's a little wild. Okay, let's just put it this way. I think if he was president at this time, he'd be like a YouTube star, a TikTok star, and whatever. let's just say it's a little wild. Okay, let's leave it at that. Then, of course, he had an untimely death, and then we had Coolidge. Coolidge was also pro-business, but he wasn't wild. He took the oath on the family Bible after Harding died, and he was low key. He believed in America. He believed in Americans. And he said the business of America is business, although that wasn't the exact thing. That's how we paraphrase it. And he believed that we should pull ourselves up by the bootstraps and the government should get out of the way. So those high taxes started to come down. He also was a fan of innovation. He loved that new invention called the wireless back then. We call it the radio now. He used it. He broadcast from it. So the parallels are there. We need the right leadership. We have a president right now that just declared war on supermarkets.
Yeah.
I don't know if anybody's ever bothered to look, but Kroger's margins are like 1.2%, their profit margin. And that's down over the last 3 years. He declared war on supermarkets. So we need a president that can go out there and say, listen, I don't need to send you $2 trillion. That eventually is going to go to the top 1%, also known as my donors. I just need to kind of move out the way, create a backdrop, particularly now because we have had an explosion of people who want to own their own business and things like that. Let them succeed. Don't make it a bad thing. Let them take this money too, because they're first generation, and leave some to their kids. Create generational wealth. It's amazing to me, Michelle. I had the opportunity last year to speak to the New York Jets players, mostly the younger guys, but everyone was invited. Except the quarterback, he didn't have to come. So, when you get to a certain level of money, you don't really need to hear anybody talk about money who's got a lot less than you do. But but they all took notes. It was so beautiful. They asked amazing questions, and they all want to know about generational wealth. They are so into it. And so we need a president that can say, hey, go out there and do the things that you need to do to create wealth in your time. And then I won't have the government take half of it from you while you're alive and the other half when you pass on. We just need a country that believes in, you hear the term shared prosperity, but a lot of times they mean shared crumbs. We need a president that believes truly in every American being able to have shared prosperity by their own two hands.
So having said that, obviously, if so much of this depends on who's president and the political dynamics, what are you thinking we can expect come November?
Right now, I think a Republican should win. Um, Again, I think things are going to be a lot worse come November for the average household. Wall Street can blow smoke all they want. You know, they had this thing they call excess savings. I had never heard the term before. When they pumped so much cash in, and at one point our excess savings was $2.5 trillion. Now, you know, we come from a poor household. Like we have excess. We had excess savings. If we did, it was like the $20 in an old coffee jar or something like that. But all of that's gone. All that's gone from poor people, from middle class people. All of it's gone. What's left are high prices that won't go down. What's left are diminishing job prospects. Right now, we're in the middle. We're burgeoning at the beginning, what they're calling a productivity miracle. It's one of the reasons the stock market's up. It's just a euphemism for right now. It means fewer people are working, more profits for corporate America. Now, there will be some productivity tied to AI over the years, too. I'm not sure it'll be so impactful that it has anything to do with this year. But the bottom line is I think a Republican should win. It'd be shocking if a Republican did not win, whoever the Republican nominee is. And I'm just hoping that that Republican says, okay, America, you've got the right stuff. You have the right stuff that you were this upstart nation, significantly younger than any other nation in the world, and somehow you catapulted to the top. I still believe we got that.
Well, Charles, unless something very dramatic happens, that Republican looks like it's going to be former President Trump.
Yeah. Yeah,
And
well,
and so you're saying that those roaring 2020s can happen provided we have the correct political leadership at the top. You're overall sounding very positive, very optimistic. What makes you pessimistic? What do you see as the biggest risk out there? What is keeping you up at night?
what keeps me pessimistic, really more than anything else, is our education system. It's awful. It's so bad. I just don't know how a nation entering into this new age is going to continue to be dominant when we're just. It's just awful, and it gets worse every single year. It really is awful. I think it's the most vulnerable point we have in our nation outside of the debt situation we began this conversation with. I think those are two massive fault lines that will at some point when they erupt, you won't be able to turn them back. You won't be able to turn them back around. I hate the division in this nation and the forces that keep us divided. It really is. It's heartbreaking. That includes most of the media. So, you know, we've got some issues. We do have some issues, but we're still a juggernaut in nation. You know, I mean, we're still a juggernaut economy. So even if Joe Biden was reelected, you know, again, we still would be a $26 trillion economy, and there'll be certain companies that would do well, but we would continue this path down a sort of form of socialism, modern monetary theory, big government, that would lead to our demise, or I wouldn't say obviously not demise, but you know, if you look at the list of all the nations that were the preeminent nations for a period of time, they had Portugal, Spain, you know, the Austria, the Austrian, Great Britain. Look
Right.
at them. Most of them are just tourist attractions now.
Yeah. Yeah. Every global superpower has had its rise and its fall, along with its currency. And by the sounds of it, you're very concerned that we could be nearing the end of the great American empire era if we don't see some major changes happening on a number of factors, from politics to the economy to education. Charles, I do want to wrap it up, though, on a positive note. Again, your book is so much about empowering people to pursue their dreams and to pursue a life of independence and a life of dignity. What inspired you to write the book?
A couple of things. You know, just so many people. I've been blessed, and so many people look up to me, and it's very humbling. I got a letter 2 days ago from an 85-year-old man who's been one of my subscribers. I'm not sure how long, and he was saying he's a failing health, but he thanked me. I wish I had that in front of me. He thanked me in such a powerful way. it just went straight to my heart, and it just makes me like, I'm a workaholic, and people say, "Oh, you work all the time." It's why I do it. It makes me feel really good. And I've watched my own family's journey, my own family struggles. I start the book talking about my grandparents, and when I was writing the book, I was running real late, and I was just waiting on one thing. And so my grandparents had a farm in Alabama, and there was always talk of how they got this farm. And I was like, well, if I can just get like the contract, the deed, something. So finally, a cousin who had it sent it to me on July 4th. So I spent all day July 4th writing and crying because if you read the contract, they gave up everything they had. They had a mule. They had 2 mules. They had the names of the mules. They had some farm equipment. Everything they worked for, they gave it up for this land. And my grandfather would find old axes, sharpen them up, go into the woods, and find a tree branch and make a handle. They had no indoor plumbing. I used to go down there. I used to hate going there as a kid. They had no indoor plumbing. And, my mother worked that iron stove, one of those iron stoves, to the point where she was impervious to fire. I mean, I would watch it pick up hot embers, right? So I didn't appreciate it as a kid, what they had done and what they had sacrificed. But as I became a man and an adult and I looked around, they did enough to move our family up a level. And then my parents did enough to move us up another level. And I feel it's incumbent upon me to do the same for my family. And if I can, help other people do that for their families as well.
Well, thank you so much for writing the book, for sharing your life lessons, and of course, for sharing some of your insights here on Kitco. We're out of time. So many other topics I would have liked for you to weigh in on, including farmland as an investment, and of course, central bank digital currencies, an issue I know we're both very passionate about, but we're going to have to leave it for now. Hopefully, we'll get to have you back again soon. Charles, thank you so much. Really appreciate it. And again, I recommend the book, Unbreakable Investor. Thanks again for joining us, Charles.
Thank you so much. I appreciate it. Thank you.
All right. And as always, thank you all so much for watching. From me, Michelle Makori, and the rest of the Kitco team, we'll see you soon.